Hey, welcome everybody to the 40 Finance channel. Growth stocks in particular right now are getting hammered in the market. There looks like to be a big inflow into large cap and mega cap stocks. So with that in mind, I thought I'd use some simple PE valuation projections for some of these names, companies that are earning an EPS but maybe have stretched valuation multiples. See maybe just how far could some of these names fall, or in some cases, perhaps there's good deals out there and they could go up a little bit. So for example, in the height of the sort of growth stock boom, it was not uncommon to see growth names trading 300, 400 times their projected earnings per share. But now you're starting to see some of those multiples come down. The earnings per share are still there. Some of them are trickling down a little bit based on analyst estimates, but the earnings per share part kind of stays static. It goes up, plus 25, minus 25%, depending on the projections, but it's the market that fuels the valuation by taking those projections and assigning some sort of multiple that investors would pay for the opportunity to get in. Now, of course, price to earnings ratio isn't everything. As most of you know, you have to factor in a company's debt. You have to factor in optionality. Could they buy other businesses or add business lines in the future and potentially grow that earnings per share beyond just an organic rate? So all of that comes into play. But for purposes of today, we're just trying to assume nothing changes necessarily over the next year and that the earnings per share projections are about right. And we'll just focus on the valuation multiple that we have today compared to what it could be in the future. All right, let's kick things off with an easy one, and that's Visa. And when I say easy, I just mean Visa has a long track record. They're a gargantuan corporation, so it's very unlikely that you're going to have, a 50% increase in sales or anything like that. And you see the year-to-date chart here. I've talked about this a lot because I'm a Visa stockholder. And last year at this time, you're at 215. Now you're down to 196. And you've got a Morningstar fair value here of 217. Let's take a look at where Visa has traded historically. So for this, actually, let me do a quarterly view. Really what I like to focus on is pre-pandemic pricing, right? Will we ever get back to a time when the market is running more or less organically as opposed to having, stimulus and all the things that go into it? So if we go back to December of 2019 and beyond, you have a forward PE, if I just highlight these, anywhere between 25 and a high of 30. So with that in mind, let's just pick a middle number. Let's just pick 28 as a reasonable forward PE for Visa if and when the world ever gets back to normal. Then we go to the analysis tab. We are in this current year of 2022. Visa actually kicks off their year in everybody else's fourth quarter. And the average estimate right now is $7.06. All right, so if we take 706, and I got a calculator here off the screen, times 28, you have a price of $197. All right, so for today's price of $196, if valuations return to 2019 levels tomorrow, you would be about right on the nose for Visa as it stands today. All right, let's try DocuSign. This one will be a little bit harder because it's just inching into profitability. You've got minus 86 cents in the trailing 12 months. Year to date, 244. Right now you're at 247 and some change. Morningstar has a fair value of 290. Now let's see what kind of historical trends we can get out of this. Again, it's going to be hard because their forward PE really only started during the pandemic. And we've had some highs, 450, and now you're going in the right direction. You're going down from this 200 level and you're in 121. I'm just going to say, with the PEG ratio close to 3 and a price to sales of 28 times, I would argue that a fair price for DocuSign, at least to start the conversation, would be a forward PE of about 100. I think you still need to come off of this, and even 100 is a little high, but if you're assuming it's going to grow in the future, like I think most of us are, then at least in my eyes, I'd say 100's a fair multiple. Now we have the average estimate for the current year, $1.70, and this multiplication is very easy. If $1.70 times 100, that puts you at 170. Now, to be fair to DocuSign, like I said, it's a little bit harder to project, so let's assume that they hit the high end of their analyst estimate, $2.03, that would bring you up to about $200. So in my eyes, if you were targeting a forward PE of 100, you're probably looking at DocuSign to get down really close to the $200 level before it starts to get intriguing. All right, next up we have PayPal. This is another stock I own, and it's been bleeding out significantly, now down to 185. And actually PayPal, this is where I got the idea for this video, because I will be adding more PayPal, but I wanted to try to put together a thought process on what I thought, what is the bottom, or what is really like a hardcore good deal on PayPal. And on the year-to-date side, we were at 242 at the beginning of the year. Now you're down to 185. Trailing 12 months of 416. Morningstar value significantly lower at 147. And with PayPal, we should have a ton of historical benchmarks. So let's go back to 2019, since they've been in business for a while. And forward PEs in 2019, you got 30, 29, 38, 35. So let's just take maybe in the middle there and just say an even 30 for PayPal. Although we can see that there might be a game that it gets to 35. We'll just stick with 30 and look for the floor. Now, on the analysis side, PayPal is still operating in 2021. So since we're talking forward PEs, we want to go to 2022. Analyst estimate right now of 533. You've got yourself a high of 615 and a low of 488. So at 533, see, 533 times a forward PE of 30, that brings the price to 159. So if you're looking for a potential floor for PayPal based on valuations pre-pandemic, you'd probably be looking at 159 or so for this one. I know for myself, I will add little bits and pieces, but I'm starting to come to the realization that we could be 170 or below on this one if we continue to see a meltdown, particularly in the fintech space. All right, let's take a look at Shopify. Let's see, January, you're at about $1,200, a little bit shy. Now you're up to $1,612. Morningstar fair value here of $862. All right, so from a valuation history with Shopify, they're just been on the cusp of profitability this year. So you can see trailing PE, the first time they reported a profit was fourth quarter of 2020. So we don't have a lot of pre-pandemic earnings benchmarks to go by. The forward PE over the past several quarters, about in the 300 range or so. And as you guys know, as more profitability comes in, usually the multiple goes down as people start to realize where a company will settle. So I will say 250. Honestly, though, in this market, I feel like 200's a gift. But let's just say 256. Keep in mind that in 2019, if we really do want to go pre-pandemic, I don't know how many 200x forward PEs you would have seen on the market, but we'll do 250, give them the benefit of the doubt. And on the analysis side, we have, let's see, they're in their current year. So we can disregard this number. Let's look ahead to next year. since we're doing forward PE. 884 is the average estimate. So let's type that in. Let's do 884 times 250, and you have a price of 2210. So 2210, if you agree with that 250x multiple, I'm going to go ahead and say let's think about a 200, because it just doesn't feel right to say a 250x forward multiple if we got back to 2019's realm. And that's about where you are with this one. 1768, it's currently at 1600. So Shopify is really interesting. I think you could get lucky and see it run down a decent chunk only because the multiple is so high. On the other side of the coin though, if you do believe this company is doing great things, their EPS has grown substantially in a short amount of time. Would they get to a point, let's say in 2 or 3 years, that they were doing $20 per share, $30 per share, and that's when you would really start to see this price that's being offered here today start to pay off a little bit. All right, next up, Alibaba. Start of the year at 236. Today you're at 135. And Alibaba should have a decent chunk of historicals. And let's scroll back to the 2019s, get pre-pandemic, aka pre-government interference for them. And you see where we're at. High 20s, mid 20s. How about we say 25x. 25x forward PE for Alibaba seems about right. And let's take a look at the analysis. Now, this one might be, okay, so they are current year 2022. 887 right now. Got the low of 6, high of 11. So let me type this in. 887 times 25. And you get a price of 221. So probably no surprise to many people who've watched Alibaba's decline. 221 seems like a pretty fair multiple for this one to trade at. I forgot to call out here, Morningstar has a fair value of 188. So whether you like this quick analysis or Morningstar, there definitely does appear to be money in Alibaba. All right, let's hit Roku. Roku's had a tough year. Particularly here recently. Started the year at 400 down to 225. They are profitable now, trailing EPS of 207. Morningstar has a fair value of 195. We look at the analysis. Oops, let's go to valuation history here first. Go quarterly. They just started to turn a profit is what it looks like. So I guess what I would say here on forward PE, I'm going to do something very similar to like the DocuSign or whatnot. I think 100x forward PE is probably fair if we return to 2019 levels. And they are still in Q4 of 2021. So we'll look at 2022. The average estimate is $1.62. The high estimate is $2.62. So if we times that by 100, obviously you'd have $162 for Roku if it was trading on that level. If you believe they outperform, the high estimate's $2.62, then you'd start to see some overlap. Honestly, it probably falls somewhere in the middle. All right, let's talk about Zillow. Here's a stock that I just started buying into on its dip. You had a price on Jan 4 of $150. It's down to $53. Morningstar fair value of $71.13. And Zillow will be interesting because they're another one that's just now on the cusp of profitability. And on the bright side for Zillow, and one of the bull cases that I'm investing in them for, is they're getting rid of a loss leader, if you will, with the home flipping experiment that's went wrong. Now it's going to take a while to merge into their new reporting and projections on EPS, but if we go with it right now, you're at about a 44x or 58x, something like that. Let's see what the analysts are saying. This is going to be a tough one, I think. You've got 88 cents for next year, a high of 208. And Zillow, again, the spread here between 88 cents and 208 is going to be really, really interesting because they're getting rid of a part of the business that loses money, right? Right now at 88 cents, if you figured maybe a 50 PE, just to be super fair, 88 times 50, you got a stock price of 44. So maybe a little bit left room to go for Zillow. If it did hit 44, I'll tell you that I would definitely be buying a lot more at that price and just waiting a couple years for the full recovery. And I think that this one jumps into profitability. It doesn't even need to take over the world. It can just jump into profitability very quickly and start building a strong foundation. All right, let's take a look at my old friend Nphase. So this is a stock that I got roasted on, basically bought in, sold at the bottom, and now it has bounced back as you see the year-to-date chart. These are the things that happen, but I think this valuation, you'll get a feel for why I sold out, but kudos to everybody who hung in there and made their returns. Got an EPS right now of $1.15, Morningstar fair value of 146. We look at the valuation history, and since Nphase is profitable, it's a little easier to see what's going on. Got forward P today of 89.29. We go back to pre-pandemic, and you see where the stocks were trading, or Nphase was trading between 26 and 43. So I think we'll go in the 30s maybe. If you look at any other solar stock in the universe, it trades for around these types of valuations, certainly back in 2019. So the premium on Nphase is pretty special. Like, it is getting 3 to 4x the valuation multiples as other solar stocks. And that's great when things are going up, but you have to wonder what happens when things go down. So if we take a 30x right here and we go to the analysis tab, they're still in 21, so let's look ahead to 22. Average estimate of $3, could be as high as $3.61. But you see that where this is going. $3 times 30 forward PE is a valuation of 90. So if Nphase ever comes back down to the 2019 levels, it would be in trouble, certainly from a fundamental valuation. And you could even add that. Let's just say it's a 50x forward PE, and you're looking at a $3 EPS next year. 50 times 3 is 150. So technically, you could be $110 overvalued. Really just depends on what the market wants to pay for Nphase technology. Right now, it's at an unbelievable peak. And people ask me all the time, like, are you mad you lost out on Nphase or whatnot? And that video always gets comments, people laugh and whatnot. And honestly, it's just the way the game goes. And it doesn't make me mad. I actually congratulate everybody who ignored what I did. And I'm very happy to those folks that saw this one go to the moon. Just make sure you know when to get out and preserve those profits. All right, 2 more here. Let's look at AMD. EPS of $3.24. Started the year at about $95, made it up to $153. I almost bought AMD when it was in that $100 range back here, but of course I didn't, mostly because I already have a chip stock with TSM. Let's look at statistics here, and let's go back to our 2019 levels. Forward PE, 43, 28, 45, 40, 49. Pretty safe to say we can land, how about in the 43 range? That sounds about right, just eyeballing these. You did have a low of 28. Historically, chips do not trade this high, what they're at today. So I'm just going to share that with you. Keep that in mind. The sector is on fire right now. but I've said it numerous times on this channel, there will be a year. It doesn't look like it'll be 2022 from what I'm seeing, but maybe 24, 25, that these valuations will come back down to normal chip levels. And in AMD's case, I would project that to be about a 43x on forward earnings. All right, we got current year is 21, so next year's 22, 332 for AMD. So 332 times 43 puts you at 142. So the way this is looking right now for AMD, 142, it's not too far off for a stock that just went up about $50. And of course, the demand for their chips and the projections for data centers and stuff like that have really pushed these estimates. I forgot on the homepage to look at fair value. Okay, 109 fair value for AMD from Morningstar. That means my projection or assessment is higher at 142, but it's not as overvalued as I thought when you kind of put some simple math to it. All right, we'll finish off grand finale here with NVIDIA. You got an EPS of 324. See the year-to-date chart. You start at 132. Now you're at 326. Morningstar has a fair value of 200. Looking at historical valuations here, let's go back to 2019. Looks like about right here. And you had 28, 32, 34. You get the picture, into the 30s. Since this one is running so hot, let's give them the benefit of the doubt. We'll inch this up a little bit and call it 35 on the basis of high demand technology. So 35 is what we'll stand at. Now let's see what the projections are. We are in the current year of 2022. Got an average estimate of $4.30. And you can see the spread here is actually pretty tight. 437 on the high, 399 on the low. So if I put $4.30 times 35 forward PE, you get a price of $150. So $150 on 325. You know, my projection is obviously coming in much lower than Morningstar, and again, it's based on 2019 valuations. I don't think we return to 2019 valuations like all at once. There's still low interest rates. There's still a lot of demand for investing. So that's probably a low ball, but you do have to kind of think a little bit about that 200 to 225 mark maybe for NVIDIA. Yes, that is how far it could fall if we start to see some major market weakness that would attack the large cap stocks. That's one of the things that's working for a stock like NVIDIA and several of the other names featured here today is that they're large enough, they may not hit these bottom tier prices because there's some safety in being able to project EPS. Analysts at least know what they're looking for on this one. All right, guys, so those are some standard valuations for today's hot stocks. And again, what we did is look back. Let's go before pandemic. Let's go to 2019, 2018, get a feel for where valuations were trading and match them up with today's earnings projections. Simple way to do it. Good way to see, you know, how high could your stock go? If things got bad, how far will it fall? It's not the end all be all to stock analysis, but it certainly is a good starting point when you're learning about some new names. All right, guys, hope you enjoyed this video. Please give a like and subscribe if you do. We will see you on the next one.